Hey guys, John Link. So let's talk for a minute about the stock market and the ways that it's viewed via their indices or indexes. I think we get a little bit confused sometimes about large cap, small business, things like that. So let's clarify that just a little bit. So, large cap stocks, cap meaning capitalization, okay? So large cap stocks are $10 billion or more companies, $10 billion or more. Now, obviously, we get these mega caps, like NVIDIA, that's like 4 or 5 trillion now. I mean, that's obviously a very large cap stock. But large cap stocks, 10 billion or more, usually they pay dividends, okay? They're not in as much of a growth mode as maybe they once were a long time ago. So they pay dividends, and I view that as kind of an incentive to help investors stay invested in the stock, giving back part of the profit because as a stockholder, you have ownership, right? You have ownership. Unlike bonds where you're lending money. Okay, stocks, you own a piece of the company, so to speak. But those are big, great big companies in a large cap. A mid cap or medium cap is 2 to 10 billion dollars. So sometimes those companies might be companies that are paying dividends, and sometimes they might be keeping that money for growth. Sort of depends. And then there's the small capitalization, 250 million to 2 billion. This is where interest rates affect these companies a lot because if they're not going to pay dividends probably because they're trying to grow. They're smaller, they want to get bigger, so they're not going to give dividends. They're going to use that money to grow, and they also might want to borrow some money, right? So if interest rates are too high and they don't feel like they can borrow money and they don't have not generating enough capital or profits to expand, that might stagnate them, right? So that's when small cap companies are what we're talking about. Now, small businesses are entirely different. Small businesses, you might be talking about the local dry cleaner that owns one store, or a nail salon, or any company that's kind of individually owned, which do make up a lot of the um, businesses in the country. But that's different from small capitalization. That's just small business, and of course, they're interest rate sensitive too, right? I mean, they're not traded on the market, but they interest rates coming down help them a lot. I wanted to delineate the difference there too. We're talking about the Dow, the S&P, and the Nasdaq. The Dow is 30 stocks, 30 kind of established stocks that hopefully represent the country. How healthy the economy is of the country. The S&P 500 are 500 stocks that also represent the health of the country, but in a different way, because where the Dow is based on the price of the stock, the S&P 500 is based on the market capitalization or how big the stocks are. They're weighted that way. So that can have a tremendous difference on how the outcome is. For example, the S&P 500 is up a lot of the time this year, right? Been up. But there have been points in time where 300 of those 200, of those 500 stocks have been down. So what's carrying the bigger, more well-known, well-established kind of names are carrying that. Matter of fact, you've heard of the Magnificent Seven, maybe the top 9 stocks or something like that. These are so huge, like NVIDIA and so forth, that have such a large portion of the S&P 500 that even though the S&P 500 component companies, over half of them may be down, the S&P 500 is up. So it's hard to reconcile all of that sometimes. And then the NASDAQ, thousands of companies that are smaller, on the smaller end of things. So they're not, again, there would be ones that aren't paying dividends. They're also interest rate sensitive because they're wanting to grow, right? Smaller companies want to borrow money maybe to grow, and an interest rate environment that's not conducive to that may stifle that growth to some extent. Um, so those are some of the differences in how we allocate capital. Is based on individual uh, risk tolerance, capacity, um, appetite, and so forth. But those, so some of the areas that we discussed that sometimes we kind of gloss over. I think sometimes people don't get exactly the drift of what we're talking about. So maybe take a look at this video and see if this might help you a little bit. Okay. Thanks.